Okay, here we have a graph here on the top of gold. This is 3 years of gold, and we see that gold came down from 1,850 down to 1,300 per ounce, which is a 30% drop in price. But silver, this happens to be a 10-year graph of silver, SLV. The silver fell from about $48 an ounce down to about um, 21.50, something like that an ounce. And what's very interesting about the gold seems to be at a where it had some support here in the past, um, and this congestion point, it seems to be having support there at 1300. The silver is at a previous peak that was broken here, and that seems to be the support, the resistance that turned to support here when it broke that back here. The silver, since it's fallen 50%, to me seems like a much safer buy in 2013 to buy the silver than the gold, because when the silver um, makes a move, it's going to make a bigger percentage move because it's fallen a bigger percentage than the gold. And you can just, if you want to buy gold, you can just then sell the silver and buy the gold, and it would be like buying the gold today at $1,000 an ounce. So you're actually going to get more gold if you buy the silver first and wait for a rally and then sell it and buy the gold. So I think the silver is the place to be in 2013 over the gold. Another thing is that if you look at the mutual fund FSAGX, it seems to be at a previous support point here that it's had in the past. This is a 10-year graph here. It's at the previous support it was at 23 that it bounced off of in the past. And this 2008 dip is a very extreme fall because we had the subprime loan crisis there. That just got overextended and it just snapped right back. You can say that about these dips as well. So I think that FSAGX is a very good percentage play as well, because it dropped from 55 all the way down to 23. Another one here is SLW, Silver Wheaton. They, although they were down here they had a really big drop here at one point down to like $2. I think that they've also fallen a bigger percentage. They've fallen in half from 47 down to 22. So they're also a bigger percentage play. You might not like that drop down to 2, so you might just want to buy straight silver or FSAGX. That's the Fidelity Mutual Fund on gold, or GDX. I think that those are better plays than buying gold at this time, because gold is going to make a smaller percentage play because it's dropped a smaller percentage. The other thing too is that a lot of people are saying, you don't want to catch a falling knife here. If you look at the graph of silver and gold here, the monthly hasn't yet shown a crossover. The weekly, same thing. It hasn't yet given on the weekly MACD, it hasn't yet given a buy signal. But we do see that the gold is at about the same price it was 6-7 weeks ago, and same thing with the silver. This is a monthly graph, so you only see the monthly here, but it's actually at the same price it was about 6-7 weeks ago. So I think I think the silver will hold 20, and if it goes below 20, I think there'll be heavy buying. And I think that the gold might hold 1300. If not, it'll definitely hold 1200 here. If the U.S. dollar rallies a little in the summer, sometimes in the summer in June and July, you get a summer rally and you get a strong dollar, which tends to peak around the beginning of August, like August 2nd. That might push that gold down all the way down to 1200. I don't really think it's going to get down to 1,000. I think it's going to hold the 1300. But if there's a dollar rally and a strong summer stock rally, the U.S. dollar would get pushed up. That might push the gold down just a little more. but it's really already seeing strong buying at 1300. It's bounced off of that now for 2 months, like 7 weeks. It's been bouncing off of 1310 there, 1300, 1310. So I think it's going to hold 1310, and time will tell. I hope you liked the video. Have a nice day. Bye bye.